Hello and welcome to this webinar and Q&A session. I'm Mark Bunting, the host of RCTV. Our guest today is Jonathan French. He's the Vice President of Capital Markets and External Affairs at Foran Mining. Jonathan is going to be giving a presentation on the firm, and then after that, we'll have a discussion about the macro and micro picture for copper, short-term and long-term. Great to see you, Jonathan. Thanks for joining us.
Thank you, Mark, and appreciate the time. So my name, and thank you very much. So
if you're all set, we're set. I will step aside and you can take it away.
Perfect. Thanks. So Foran Mining, ticker's FOM on the Toronto Stock TSX. We're about $1 billion market cap company, and as our presentation here says, we're committed to zero carbon copper and trying to establish Canada's next critical metals champion in one of the top jurisdictions in the world. So looking at Foran, basically we have a three-pronged approach, and this is our blueprint to focus on one key goal, which is maximizing risk-adjusted returns for shareholders. The first prong is delivering initial phase production from our McIlvenna Bay mine in Saskatchewan. It's an underground operation. We put a feasibility study out last year that outlines a 18-year initial mine life, producing about 65 million pounds of copper equivalent over that period. And as we develop the initial phase, we'll be using that cash flow to not only potentially expand the mine and build a centralized facility, but use our, and tangentially working on our second prong, which is exploring and defining additional resources along our belt. So McIlvenna Bay is a VMS deposit, and typically these operations in this region can double in size once in production. So getting it into production is the first goal. And as we're doing that, we continue to expand and explore and uncover additional resources for the centralized milling facility. And the third prong encompasses all of this is our net positive strategy and trying to achieve a carbon neutral operation. This hasn't really been done before in the mining industry, and it's very tough to do, but we think over time that this would lead to superior investment returns for shareholders, both on a multiple basis, but on a top level revenue generating basis as well. I think one thing that sets Foran apart is really our shareholder base. We've been very fortunate to have the support from other like-minded, long-term valued investors, such as Fairfax Financial Holdings, which owns 23% of Foran. We've also had an agreement with Sprott Resource Lending to obtain a $150 million credit facility to help build the mine. And as well as we've had mining magnate Pierre Lassonde, who's been a shareholder since 2009. So this, coupled with other investors, are really the core foundation of why Foran is what we are and how we're trying to strive to be, like I said, deliver superior investment returns for our shareholders and have the long-term vision and support from our shareholder base. Looking at our location, McIlvenna Bay is located 65 kilometers to the west of Flin Flon, Manitoba. That rings a bell. It's been the heartbeat of Hudbay Minerals Manitoba operations for the better part of half a decade. And the benefit here is you're close to infrastructure, and we have roads, we have power lines, rail. And the other benefit we do have is on labor. The 777 mine in the middle of the screen here actually shut down last year. So we have access to a qualified labor pool once we get McIlvenna Bay into production. I think one of the risks that are still undervalued today is geopolitical risk. When looking at the oil industry as a comparable, obviously it's 10 times the size of the copper industry. There's about 13 countries in OPEC control about 40% of the world's global oil supply. In the copper space, there's 3 countries that control almost 50% of that, and that's Chile, Peru, and the DRC. So there's a very big concentration risk in heightened geopolitical areas, and having the ability to source and find ore and copper outside of these heightened zones is a big big benefit for shareholders and investors. Saskatchewan's ranked number 3 globally according to the Fraser Institute. And we're very fortunate to be part of this small knit community. Saskatchewan is a population of around 1 million people, and it's really, we have the opportunity to be Saskatchewan's first base metal mine. So having that certainty on your political stability is so critical when you're looking at building a mine that's going to last for decades. It really gives us peace of mind and should give our shareholders peace of mind as well. So on the first phase, or first prong in delivering initial phase production, we've been de-risking the project from resource delineation all the way to feasibility, and now entering the construction phase. Earlier this summer, we announced the environmental assessment permit that was received from the province of Saskatchewan. It took us about 2 years to do that, which is a very short amount of time, and that just gives credibility to what we've done and the ability that we've provided all the information necessary to get this this agreement. And this is typically a large hurdle for investment in developing and actually hitting the construction path milestones. So we really will be coming to a construction decision in the coming months, and it's a real benefit and achievement of really our team. Secondly, we also announced a collaboration agreement that we signed with the local Indigenous community, the Peter Ballantyne Cree Nation, in June of this year. And this is really critical to have the local community support, the local Indigenous, and we wanted to make sure that we tailor-made an agreement specifically to them to foster a long-term partnership, creating jobs, creating education, and just having respect for them throughout the entire life of the mine. And we're very fortunate to have them on with, as a partnership. I think one important thing also to mention on building a mine is the capital intensity. A lot of these larger operations globally, take $5 to $10 billion to build, in some of these higher risk jurisdictions. So when you have a capex increase 10, 15%, you're adding a significant amount to have to fund from that sources. Whereas the McIlvenna Bay, our feasibility study out in 2022 outlined a capex of just under $400 million. So if you have any variations in your capex, it's really palatable on a relative basis. So looking on a capex per ton of production, McIlvenna Bay is a top quartile asset, and that's why our goal is to get it into production first. And then once it's in production, we can use that as a base to fund cash flows for future expansions. So looking at the second pillar on exploration, over the last 20 years, 18 of it has Foran has been an undervalued or undercapitalized exploration company, focusing all its resources on delineating and de-risking McIlvenna Bay. Over the last 2 years, we've had the ability and funding to start expanding our reach and exploring some regional opportunities. And as you can see, to date, there's been about 10 to 20 times more drilling that's been conducted on some of these larger VMS deposits in Canada, Flin Flon, Snow Lake, Noranda. These are operations that have been producing for 50 plus years. We think there's ability to potentially reach those levels, but we just need to keep exploring. And we're very excited to start expanding out and really discovering what we have on our properties. And as we go in and we explore, we've been successful to date, and successful very close to McIlvenna Bay and where we will potentially build the mine. So our most recent discovery was made last year we've called it Tesla. It's 300 meters away from McIlvenna Bay. And really, we've outlined a 900 meter strike or conductor. Today, we also announced the strike extension to 700 meters, but we've also 750 meters, but we've also found a bridge zone that actually potentially connects McIlvenna Bay and Tesla and feeds it into one substantially larger zone. And this is critical because we are really starting to uncover exactly what holds on our properties. Our unique strategy of combining geophysics and geoscience is really starting to take hold, and we think we've unlocked the key to really explore and expand what we know so far. As we go through this, we really have the opportunity to explore and potentially find, one of Canada's largest VMS discoveries in recent time. And building off of Tesla and our strategies to date, we've uncovered two other conductors nearby, the Higgs 1 and Higgs 2 conductors, which are of substantial size as well. And we will be drilling this later this year. Higgs 1, we are actually currently drilling, and we should have some results hopefully in a couple months. I'd like to caution that this is true exploration, and it's very exciting. Not every hole is always going to be a banging hole, but it's something that will teach us and help us learn for the next holes, and really help us build into this idea that we can generate a substantially sized centralized facility and build a multi-decade facility and become really truly this critical minerals champion that we so envision. And just lastly, on the last pillar that I mentioned on the net positive strategy, we understand that a lot of companies and, I shouldn't say companies, but a lot of people appear that talking about ESG can be greenwashing and not actually, improving and pushing forward the narrative to make a greener society. we like to, we really like to live this and truly believe that we can achieve a carbon neutral production over time. The biggest key hurdle here is the hydropower, and we've been able to successfully source power from the hydro facility at Island Falls in Saskatchewan. That's 2/3 of your emissions. We'll be using battery electric vehicle fleets underground, which will reduce our emissions, and also looking at other initiatives that haven't been done in mining before, like injecting CO2 into our underground backfill and using any abilities and levers possible to achieve that carbon neutral and potentially carbon negative target over time. I think over time, this will lead to superior returns for shareholders because your top line revenue will be benefiting from a higher prices as companies will want to reduce their scope 3 emissions. So the smelters will pay a premium for that. And also on a multiple basis on your share price, you should reflect that should be reflected in the quality of your investment. On the capital structure front, as I mentioned, Fairfax is 23%. Management owns 17% as well. That's a significant stake. We like to believe that we have skin in the game with our shareholders, and that's why we're so focused on risk-adjusted returns on the share level, because we're shareholders alongside you, and we really want to benefit everyone and put this into production and build this asset into where we think that it can be as a group. Just lastly, on catalysts, we have a lot of upcoming catalysts for the second or the last part of the year here. On exploration, we had a release today. We plan to release another one early October, as well as stagger them over the next couple months as we expand some of these regional targets, like I mentioned, Higgs. We'll also be providing updates on our construction activities, pre-development programs, also mentioning what we're doing on our net positive strategy and pushing that narrative forward. Other things to look forward on the catalyst front will also be potential funding opportunities that haven't been announced, like through the government funding initiatives, as well as some information on an exciting new development in Canada, which is the investment tax credit, the reimbursable investment tax credit, which could be a game changer for the industry, as well as potential ETF additions, which will increase our flows from that perspective as well. And for the end, that's the end of my presentation there, Mark, and I appreciate your time. And, like I said, just all of this really encompasses what we're trying to achieve here is build a critical minerals champion, be a blueprint for net positive mining, all while focusing on shareholder returns.
All right. Thank you, Jonathan. Excellent presentation. I want to remind our viewers, let them know that Jonathan and I will be doing a deep dive in conversation RCTV interview in the coming days. So we'll be delving into a lot of the points there that Jonathan made in the presentation concerning the three-pronged model and all of the boxes that this company, Foran Mining, appears to be checking here with its unique model. So great stuff. In the meantime here, Jonathan, let's keep it going and we'll look macro at the copper picture. And that we spoke with a few of your peers recently, and one theme that kept coming up was investor sentiment being a challenge right now. Do you agree with that? If so, how is it impacting Foran Mining, and how are you trying to counteract it?
Yeah, no, it's a great question, Mark. And being a company in the metals and mining space, I think that's always going to be the case with a cyclical environment. There's no other industries where your top line revenues are so beholden to external circumstances and differencing in mining and metal prices. And, that's a challenge that we can't control. And that's something that, we got to focus on what we can control. And at the end of the day, you got to realize and understand what investors want. And a lot of it, a lot of people think it's about making money. And yes, that's a core component, but it's also about limiting the downside and limiting your the risk of you losing money. So using that and figuring out your strengths and weaknesses, that's where we try to focus on. And having shareholders that will invest alongside us regardless of the cycle is something we're very fortunate to have. The other thing, other things, having great jurisdictions like being in Saskatchewan, as well as having robust assets that have a palatable capex and ability to withstand any changes in metal pricing over time. So those are kind of key things that we try to focus on, and that helps us have a degree of comfort throughout the cycle.
Right. I want to circle back to your jurisdiction in just a while, but right now, let's talk about and get your views on the short-term conditions for copper and then longer term and straddling that line. We know that China is slowing down. They are not building like they used to. So you've got that in the short term, along with other factors affecting copper. But then combine that with these expected deficits in copper in the next few years, going out about 8 to 10 years, and the demand for the energy transition. How do you view the short term and the long term for copper right now?
Yeah, it's an interesting dynamic. I think there's a lot of people that agree with the long-term fundamentals and the supply and demand imbalance. There's a little uncertainty on the short term and what's going to happen between now and then. I think a lot of things, or there's a few things that I think are a little bit misleading, is that everyone is focused on, in China and the construction activity declining and focusing on that. While construction activities are down in the 20% year over year, if you look at refined copper demand in China, it's actually up 11% year over year. And why is that? And it's really because of the grid investment that China is doing. They're building grids across the country and refining it, for this new EV revolution. And that is something I think people find a little bit misleading. So I think over time, we're going to see that reflective, not only in China, but throughout the world, as these grids need trillions and trillions of dollars of investment to get up to par. And I think that's essentially kind of on the short term. And then, the long term, it's a big risk. And, the amount of production currently that we have is not something that is going to be maintained. We have the largest assets in the world that have declining grade profiles, and you really need capital investments in the tens of billions of dollars to keep that stable, let alone grow by larger than 5% a year, which I don't think has been done over the last 15 years.
Right. And as you know, there are a number of groups predicting supply deficits for copper concentrate and refined copper, depending on whom you listen to, starting in a couple of years and lasting at least until the early 2030s. So do you foresee a supply crisis, or is it slightly overblown and that enough capacity will come on over the next, say, 8 to 10 years, so it won't be such a dire situation? Where do you stand on that?
Yeah, it's a great question, Mark. And I think, I don't see how it's extremely manageable under today's current supply. I think there's a lot of projects that are in that probable phase that might come into production that could supply or support that gap that we see in current supply and current demand, or in future supply and future demand. But these assets, like I said, need tens of billions of dollars, and they're located in, Chile, Peru, Argentina, Russia, the DRC. And, when you're building an asset that's going to take building an asset that's going to be producing for 40, 50 years, you really want to have certainty of law and understanding what your corporate tax structures are, your royalty rates, and have a good degree of confidence that they're not going to change. And if they are, you need to be risking that appropriately. And at today's current copper prices, it's not incentivizing people to be supporting new projects and initiatives. So I think the only way for this to really shift is higher copper prices over time, which will incentivize people to actually build other assets.
Right. Well, demand for copper from EVs alone, you probably know this, is expected to double in the next 8 years. And you make a good point about refined copper demand currently in China. I actually didn't know that, and that's something interesting to know. That it's not just fixed asset investment like it has been over the years to build apartment buildings. It's now they need to feed the grid as well, as you mentioned. Now let's get back to being in Saskatchewan. Very friendly jurisdiction, obviously, whereas some of your peers operate in countries and regions that do have geopolitical risk. Does that give Foran any specific advantages in terms of executing on your plan to become a critical metals champion?
Yeah, absolutely. It gives us great confidence in understanding the risk profiles as we move forward, and as we build this asset, we have great confidence that we know what the structure is going to be, and having the ability to look in the future, not just for the next 2 or 3 years of a build or the first 10 years of a mine life, but seeing, what's the plan in 40 years? What are we going to do? And having a degree of confidence that things shouldn't substantially change in some other parts of the world. And I think that's one benefit. And like I said, I think it's something that is still relatively mispriced. If you look at investors or analyst models, typically they're using flat discount rates, whether you're a developer or a producer, but you're still using the same discount rate if you're a developer, whether you're in Chile, whether you're in Canada, whether you're in Spain. So I think there's a lot of misprice and opportunity for investors to reallocate capital.
Lastly here, Jonathan, as we wrap things up, this is where I tee it up for you with a nice little softball, and you can hit it out of the park in terms of the investment case and your 30 to 45 second pitch for Foran Mining.
Yeah, no, I appreciate it, and I'll try to knock one here. But basically, it goes back to my earlier point that great investments have a disproportionate risk reward profile for investors. Minimizing down risk exposure while maximizing upside potential. And I believe our strategy here at Foran to deliver initial phase production, expand and define what we have, and build this into a multi-decade asset, all while delivering net positive initiatives, I think will potentially can achieve that. It will be amenable to investors. And like I said, this is all consolidated under our core goal of maximizing risk-adjusted return for shareholders.
All right, great stuff today, Jonathan. As mentioned, we'll be talking soon for an RCTV interview, so our viewers can look forward to that. Thanks again for all the great information, and I'm sure we'll be talking shortly.
Likewise. Thank you very much, Mark. Really appreciate this.
Okay, Jonathan French, he is the VP of Capital Markets and External Affairs at Foran Mining. Thanks a lot for joining us today, and we'll see you next time.
Cheers.